Happy Monday. Brent Tallman here with Fairway Independent Mortgage with a mortgage market update. Today is January 23rd, and we're just going to get right into it. Rates. The average rate today is 6.15 on a conventional loan. That is up by 0.06 from last week. FHA's 5.75. That's up by 0.10 from last week. And VA's 5.80. That's up by 0.08 from last week. And there's just some bond vitality that is driving all this. We do expect rates to trend a little bit higher this week, and really not expecting any big market movers to allow rates to go down until the next inflation data comes out. And so my advice to people is lock. And if you lock with Fairway, we always have a rate renegotiation that we can do as well. So, but anyways, we'll continue to monitor that as we move forward. The other news that came out, housing news, is existing home sales fell again for the 10th month in a row. So that may seem negative. The good news is it was not as low as they expected it to be. So that is great news. Also appreciation. Homes still went up on average 2.3%. So we're not seeing this housing crash that everybody is predicting. We're actually seeing a healthy appreciation rate, which is really anywhere from 2 to 5%. So we're still in that healthy range, which is good. And also we are, even though immediately rates are going to go down, we're expecting those to go lower. And as they get lower towards the second quarter of this year is what we're expecting it to be, the buyer pool is going to increase. So even though inventories really haven't gone up as much, now is a great time to buy, because as the rates get lower through the second quarter of this year, there's going to be more and more people in the buyer's pool. So remind that to your buyers out there. Other good news is 31% of all homes sold in December were to first-time home buyers. That's up by 3%. So that's good to see new home buyers in the market. And it's a great time to encourage them to continue to buy, just because you can actually get a house and you get seller concessions as well. The other news that is coming down the pike that was going to impact you is loan level price adjustments. This comes down from FHA, which is the Federal Housing and Finance Administration. They oversee Fannie and Freddie, which are the two largest buyers of home mortgages. So they set all the guidelines. And so they have come down with some loan level price adjustments that's going to begin May 1st. Most lenders will probably put them in their rate sheets beginning in maybe late March, April. And there's some good news and bad news in all of this. The good news is if you're going conventional and you have a below a 680 credit score, they're not going to ding you as much on that. I always tell people, if you're going conventional, you really need to be above a 680. But now with these new loan level price adjustments, that won't quite be the case. On average, on a $300,000 loan with these new adjustments, the buyer is actually going to save roughly around $3,700. So that's a big change. But the bad news is people with a higher credit score are actually going to get bigger hits unless you have a 760 or higher credit score. I always used to tell people, aim for 720. There really wasn't a big adjustment after 720, but now that's going to change. There's going to be loan level price adjustments up until 760, and then you'll start seeing some bigger benefits. So pricing is going to increase for those with the higher credit score. Don't shoot the messenger. I'm just the messenger, and I don't make up these rules, but these are the people that we elect, and these are the rules that they come up with. The also thing that's going to hit, which is not good, DTI, so debt to incomes that exceed over 40% are also going to get hit with the loan level price adjustment come May 1st. And I don't know about you, but most of the clients I deal with have way over 40%. Now, these are just on conventional loans. So they're going to start to factor in debt to income ratios, and that's not going to be good either. So how do you prepare for this? I think one of the best things you need to do is learn your FHA. Learn your FHA. A lot of these loans with lower credit scores, with DTI issues, are going to go, even people with good credit are probably going to lean towards FHA because it's going to be less expensive for them. And so learn your FHA. There's a lot of myths out there about FHA, what you can and cannot do, and about the property. I am more than willing to come and spend time with you or spend time with your office and go through FHAs and the requirements so that you guys can be prepared to do FHA, because I really think you're going to see a lot of FHA financing in the future because of these loan level price adjustments, a lot more than what was in the past. And then as far as growth and connections, fanatical prospecting. So if you're interested in that, that's going to start in February. And then we'll also be doing a realtor happy hour come February. Date and location to be determined. It's going to be in Sanford. And so we'd love to see you there. It's just a time to connect. And then if you're interested in doing any type of seminars, home buying seminars, seller seminars, investor seminars, anything like that, I'm more than willing to partner with you on that. Please give me a call or shoot me a text or send me an email. Love to do that. And honestly, as I always say, now is the best time to buy, and that's more prevalent than ever. So get out there, be the leader, and remember, now is always the best time to buy. Take care.